I'm Hazel and I'm here with James Timpson, Head of Asset Management, to talk about what's been happening in the markets. So, what has been happening?
Hi Hazel. Well, the good news is it's been a really strong start to 2025 for markets. The MSCI World Index, which tracks the global equity market, that was up around 3.5% during the month. And one market which did particularly well last month was the UK large cap market. The FTSE 100, which measures large cap UK stocks, that reached new all-time highs during the month. And one of the reasons it did so well, partly because of better than expected inflation data, but also last month we saw some weakness in the pound. And that actually tends to be quite good for large UK companies because they derive so much of their revenue from overseas. So when foreign currencies do really well against the pound, that's actually quite good news for large UK stocks. So that's one of the reasons why the UK market was a particularly strong performer last month. But overall, pretty much every equity market did well.
Brilliant. So markets overall did well, but there's been a lot of heat on Nvidia because of DeepSeek.
Yeah, so last Monday, Nvidia, the big US chip firm, that lost 17%. And that's because of the emergence of this new AI program from a small Chinese company called DeepSeek. And the thing about it is it's considerably cheaper to produce than the AI models that the likes of Nvidia have been coming up with. So when this came out last Monday, it sort of sent shockwaves in the US tech sector, which is why Nvidia fell 17%. And that equated to about $600 billion in market value, which is the biggest one-day wipeout for a single stock ever. Just to try and put it into context, if you imagine that Nvidia's shares were shared equally across the entire global population, then that day everyone in the world lost $75.
Wow.
That's how big that fall was. So yeah, like I say, the biggest one-day wipeout in stock market history, and it hasn't really recovered since then either. Nvidia's shares are still about 15% down from where they were before that day. So the big question is this the big turnaround we've been waiting for?
Interesting. So we'll see. So that was last month, but this week there's been a lot around the US tariffs introduced by Donald Trump. Can you tell us a bit about that?
Yeah, so markets were reacting to these possible tariffs that Donald Trump is going to impose. It was mainly surrounding Mexico, Canada and China. So markets were wobbling a bit, but then they did actually start to recover later on in the day when it was announced that actually Trump had been speaking to the president of Mexico, and actually they're going to put a hold on those tariffs for now whilst they try and strike a deal. So it's possible that really all this talk about tariffs could just be to help with negotiations, and possibly there won't be any significant tariffs imposed, but we don't know. So we can expect to see quite a bit of volatility in markets and while this is all playing out.
Okay, so expecting possible volatility, how are we positioned for this?
So at times like this, it's always a good reminder of the importance of diversification. So we are not too heavily invested in just one sector or one market. We are well diversified across lots of different global markets. And even within the US market, we have lots of diversification between different indices. We're not just heavily concentrated in the S&P 500 index, which is quite tech heavy now. We also have exposure to the equal weighted index and a Russell value index and a small cap index as well. So we are very strongly diversified at the moment and should therefore be able to withstand any bouts of volatility that come along.
Brilliant. Thanks, James. We'll leave it there. If you would like to get in touch, you can contact your courses advisor or contact us through the website. See you next month.